Hi everyone, welcome back to Corporate Decoder, the place where we turn corporate mumbo-jumbo into plain English. Today we're diving into Broadway Financial Corporation's recent filing. Get ready because it looks like they're having a bit of a paperwork problem. They might get kicked off the stock market and you might think your investments in the company might turn sour. We will explain what that means in detail. If you like getting this information, please subscribe and join our Discord channel. The link is in the description below. Broadway Financial Corporation, that's their official name, filed what's called an 8-K form with the Securities and Exchange Commission, or SEC. This form is basically a quick update a company has to send when something important happens between the regular quarterly and yearly reports. Think of it like a breaking news alert from the business world. This particular 8-K is all about a warning they received from Nasdaq, the stock exchange where their shares are traded. Scroll notice of delisting or failure to therapy to satisfy scroll. The heart of the issue is that Broadway Financial didn't file their quarterly report called a 10Q on time. The 10Q covers the first 3 months of 2025. Nasdaq sent them a notice saying, hey, you're not following the rules. This rule they broke is called Rule 5250, Chev Yuan, and it's pretty simple. Companies listed on Nasdaq have to file their financial reports on time. Missing the deadline doesn't automatically mean Broadway Financial is kicked off Nasdaq immediately. They have some time to fix things. The company says that they believe they will become compliant soon, so it doesn't look like something to worry about too much. So what's the holdup? Broadway Financial says it needs more time to figure out the value of something called a securities purchase option agreement. Essentially, this agreement gives them the right to buy back some preferred stock they issue to the US Treasury. Valuing this option is proving tricky, and also the company needs time to address the fair value measurements disclosure. And on top of that, their accountants crow stock they issued to the US Treasury. Valuing this option is proving tricky. Also, the company needs time to address the fair value measurements disclosure. However, on top of that, their accountants crow stock they issued to the US Treasury. Valuing this option is proving tricky. And also, the company needs time to address the fair value measurements disclosure. And on top of that, their accountants, Crowell, need extra time to review the company's internal controls, basically making sure the company's finances are in order. Nasdaq is giving Broadway Financial 60 days to submit a plan to get back on track. If Nasdaq accepts the plan, they could get up to 180 days to file the missing 10Q report. If Nasdaq rejects the plan, Broadway Financial can appeal. The good news is Broadway Financial says they plan to file the missing report as soon as possible, well before the 60-day deadline. So it looks like they're taking this seriously. To keep everyone in the loop, Broadway Financial also issued a press release about the Nasdaq notice. This is part of what's called Regulation FD, which requires companies to share important information with all investors at the same time. Of course, the company includes a warning about forward-looking statements. This is standard legal language saying that their expectations for the future might not actually happen. There are risks involved, like Nasdaq rejecting their plan or further delays in their financial reporting. The company also states that you shouldn't base any decisions on forward-looking statements because they are not 100% correct and only rely on data available today. Now, for my take on this situation, Broadway Financial's delay is not ideal, but it doesn't seem like a disaster. The reasons they gave for the delay, like valuing the stock option and the accountants needing more time, sound like technical issues rather than signs of deeper problems. The fact that they plan to file the report quickly and are communicating with investors is reassuring. Of course, there's always a risk that Nasdaq could reject their plan, but it seems unlikely at this point. Overall, while this Nasdaq notice is a bit of a red flag, it doesn't appear to be a major cause for alarm. Investors should keep an eye on the situation, but there's no need to panic just yet. Alright, that's our breakdown of Broadway Financial's latest filing. What's your take on this situation and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.